Good morning, everybody. I hope you had a great evening. It was pretty pleasant in Wichita. The wind is from the south. We were in the 80s last night. They say we might even get up to 90 today before the effects of that hurricane that hit Baja starts floating into the area. Some moisture in the forecast. I remember one October, maybe a decade ago, where we got like a 6-inch rainstorm off a similar hurricane that came onshore, but the flood damage is supposed to remain in Arizona, New Mexico, and the Texas Panhandle. Looks like it'll go a little bit south of us. So summer has returned. Our fall-like temperatures are behind us. The markets have all rallied on the upcoming FOMC announcement. Yesterday, China added the equivalent of $81 billion to their economy, and every market except for the dollar just took off to the upside. You saw it in the euro, you saw it in the metals, the industrial metals, you saw it in stock markets around the globe. So as long as G20, as long as everybody is borrowing money to spend on government programs, a lot of that money ends up in the stock market. So the game since March of 2009 is the same. It ends when somebody actually begins to tighten. And the only major player in the world that talks about tightening remains Great Britain. And now they got the Scottish referendum facing them, and I believe Scotland votes tomorrow. Be interesting to see how it turns out. Basically, for the last week, one day they vote for independence, one day they don't. It goes right at about 50-50, and no one's making a call. My guess is that given human nature, where human nature really doesn't like change, they like it as is, that Scotland will vote to remain a part of the UK, but we'll see. They do have, if they take over their oil fields, their gas fields, they do have a great source of income, a natural resource right there. And the tribes of Scotland, they figure it's their time to benefit from that, not let some of that money go to Great Britain, to the UK. So that would be a momentous vote. I mean, it'll overturn several hundred years, I think 300 years plus of history if it happens. So today's FOMC will hinge on two words: considerable amount of time that interest rates are going to remain low. The taper is expected to continue. The overt open support of the market will end in October or November, and interest rates are going to remain low for a considerable amount of time. And I frankly don't see how they can raise interest rates, just because right now $250 billion a year goes for interest payments. And if we go back to our historical norm for the portfolio, where the average interest rate has been about 5.5%, that $250 billion jumps to $900 billion. And that's a big change. So I don't see, like I said, I don't see how the Fed can materially raise interest rates. I see a seller at 12 to 16, so we've got our first sell 11 to 15. I still see a buyer in our 4 to 8 area. I'd like to get that buying done down here closer to 5. Allow them to test yesterday's lows, see if it holds. We are selling right now, so we'll make our first buy 1 to 5. And we'll plan on trading, with support at 124, even 124.04, and resistance at 124.12 to 16. Having said that, it might take an 8, just like yesterday, to get off along. I don't know. Today's news: CPI unchanged, core +2, tenths. Current account balance minus $114 billion. And NAHB housing in price index unchanged at 56. And crude inventories, which will be of interest to no one but the energy players, minus 0.9 million barrels. Then FOMC. And FOMC is what the market will focus on. So I see current policy, FOMC staying the same. Okay, we'll just have to wait and see how the market operates in that 124.06 to 8 area. We may have to raise our buy. Okay, looking at the 30-year, pretty aggressive. We've been able to do better. Got volume here at 10, the overnight at 10, so we'll make 9 to 13, sell 1. And then sell 2, 19 to 23. On the support side, I can make it 25 to 29, and maybe we may have to move it up to 01. Could be a pretty quiet session, and 21 to 17, so this is our question mark right here. I'm playing for this high volume number here at 29, the attractor to pull us to it. Okay, looking at gold. Gold is quiet. I think gold's probably more influenced by what goes on in the Ukraine and Russia than what's going on in the Middle East. But a headline, China against the Philippines, Vietnam, India, or Japan or Taiwan would change things pretty quickly. So this market is on hold. If the Fed keeps current policies the same, it would be, with the taper coming down, that means they're printing less money, would be a minor negative for gold. But again, I think a lot of the world is interested in accumulating gold to protect their backside when the central banks around the globe are forced to tighten. You know, when you look at the status quo, nobody wants to give up any bit of what they have right now. They want somebody else to bear the costs. And it's just human nature. So there isn't a central banker or government out there that wants to jeopardize their current position or their current roles. So that's why it takes a catastrophic event, especially in representative democracies, to force governments to change what they're doing. I mean, it's just human nature. I mean, using myself as an example, outside pressures and outside influences have been the catalysts that have made me change. And, you know, necessity is the mother of invention. That certainly rings true for everybody. And it's a great, you know, the government tries to build support by telling people that necessity isn't the mother of invention. You don't have to go through that. You don't have to go through hard times. Just vote for us and we'll take care of you. They don't tell you that it brings with it a subsistence living. Really, poverty is the only way that they can do that. And just look at the tyrannies around the globe. It's right in front of our faces. We'll see how it goes. Okay, the euro, if the Fed leaves interest rates as is, I don't see that a lot has changed for the euro. The European Central Bank still wants the euro to come lower over time. So we've had a pretty nice rally. I think more of this is off of what's going on in Ukraine and securing their energy supply. The EU has been pretty accommodative. The headlines have been a little bit harsh, but when you got into the details, there isn't much there. And the stuff that's really controversial has been tabled. And the EU has told Russia that it's all open for discussion. I think the ECB desire to see a lower euro ultimately is what holds this market in check and then takes us lower. So the overnight session high was 75. Our 75.2 area once again holds up, and the second area is against the buck basically. So 90 to 130 would be sell 2, 70 to 80 will be sell 1. It's pretty aggressive. We'd like to get it done at 75 or better. We've got a D pattern here. It's neutral, so it's telling us to sell this 75 area and buy against 50. So we'll make buy 140 to 50. And then 20 to 30 for buy 2. Probably catch a little selling if the Fed does what I've said they will do. But then I think the dollar can come back and the euro will catch some selling. Okay, looking at crude, there are revolutions, usurpation of power by force, require 4 things. And if you can't attack the leadership, if you can't eliminate or cut off the head of the leadership revolution, then the next best place to go is the financiers, the facilitators, those that supply the weapons, those that supply the passports, those that supply the funding. And don't know how much money they got by taking the Bank of Mosul, but ISIS now has eliminated the middlemen and are directly selling their crude oil through Turkey. And they move that by tanker. And one of the ways that you can really disrupt what they're doing is just interdict those tankers. Just any oil tanker you see on the road in their territory, you just blow it up, and that's pretty easy to do. So that is one way to stress those guys. Okay, we left last night wanting to sell crude at, let's see, I think we had 95 and a quarter we got there. That looks, got a little bit lower, so this 94.75 to 95 is sell 1. We got our sell overnight, and then we'll make it 25 to 50 for sell 2. I had this breakout from 94.12, so we'll make 94 and a quarter buy 1. And then 50 to 75 buy 2. So what we have that is also a factor supporting crude prices is that the ISIS oil may be taken off the market. And that would be somewhat supportive. It's not an amount that you can count on regularly, but it is a part of the supply. And that could be one thing that was behind part of the rally yesterday. I mean, China can't buy all the crude oil in the world, right? $81 billion worth of stimulus isn't going to buy a hell of a lot of crude oil. Okay, down to the E-mini. The E-mini has been strong. We talked about it yesterday morning. The tendency for the stock market into an FOMC since March of 2009 has been to rally. It's not 100% guarantee, but that with the Chinese news yesterday, we came in. We were fortunate to be able to get off our buy in the 70 area, plus or minus 1. Huge day. It's holding these gains, so this first little really good support down here is in the 85, 87 area. Would like a little weakness, a little profit taking before the FOMC. That would be one area to get long in, and 80 to 82. This breakout right in here would be the second buy area. That said, the overnight session low is 89, so this is kind of our question mark area. We dealt with a P yesterday, a P today. So first sell is going to be 95 plus or minus 1. Trading range into the FOMC, sell number 2 is going to be 2,000 plus or minus. No magic in those trades. It is where resistance is. And we're going to take an exchange members approach. This is support, this is resistance, this is where we want to get long, this is where we want to get short, and if we're wrong, we're at the market's edge, we've got a small, manageable loss. Okay, CPI unchanged, core up 0.2 will not be a factor because the Fed's not fighting inflation by raising interest rates. Current account balance minus 114 billion. That puts us on track for another $1 trillion deficit. The budget deficit is not under control. This $580 billion deficit, we've got it under control, is a lie. It's running $1 trillion a year. NAHB housing index at 56 maybe would play a little bit. Crude inventories won't play at all. Down to the FOMC. It's going to take about 15 minutes to get everything up and posted. I'm going to get busy on that. Be back with you as soon as I can. News at 8:30.